Good evening, my predicted trades family. Hope everybody's doing well. Oh, excuse me for a second. There we go. So, I hope everyone's doing well. Gonna dig into a little Sunday evening prep. Just taking a look at the daily on ES for a little broader spectrum of what's going on. This week we do have an OPEX week coming up and a quad witch. We're coming up on the futures contract changeover, so we want to be ready for that. And we've had our little pullback from getting up to this key zone near 4600 and then coming all the way back down to this daily Ichimoku around 4400, where we've based and bounced, and you could say we're trying to hold up the highs from that double bottom. If we zoom on in, we also have our daily moving averages all stacked together, and you can see we bounced up to the top of that Ichimoku cloud and then back down to our daily moving averages to close out the quarter. Definitely going to be an interesting week, and before I get too ahead of myself, let's take a look at our economic calendar. Hey, good evening there, Ellie. So, coming up this week, we do have on Wednesday CPI, and then on Thursday PPI. Definitely going to cause some volatility in the market on an OPEX week. To close out the week, looks like we have some import prices, some manufacturing data. And then going into next week, the big one is going to be FOMC and the next potential rate hike. We do have Powell speaking after that. So definitely going to have some fun next week on Wednesday. But overall, let's see where we are on the intraday. Oh, and we just had futures open with a big old gap up to 4,500. Very interesting. If you guys look back to the last contract changeover, we also had a gap up, and that's technically this little zone. That we just barely tapped the top of in our little sell-off back in August. So we got another contract changeover, another interesting little gap up. It'll be curious to see if we stay above 4,500 and above the daily 50 on any kind of overnight or this week, and try to bounce off of that daily moving average to head back up north of 40, stay above 4,500, try to make it back to 4,600. Or if we're going to run into that Ichimoku top, that daily squeeze top around 4,550, and roll back over to fill this very large earnings gap. This very large contract changeover gap. So going to be very interesting. If we look, POC is still down at 44.66, and basically kind of where we closed on Friday is where point of control sits. But the month is only 10 days in. That point of control is still establishing itself. It could easily get pulled up if some volume comes in this week. Being that it's a quad witch week, we'll have to see if they kind of keep it low volume and if they keep it in this range. Overall, let's zoom out just a hair. We do have a daily squeeze top up near that 45.50, like I mentioned. The bottom of which is down near 43.60. And even though we're getting a decent gap up, we're still, near our daily moving averages and kind of near the middle of the range. So the question will be on a quad witch week, are they going to try to keep us in the same kind of range between 45.50 and that 44.50, we'll say. Basically a 100-point range that they could keep us in, allowing these squeezes to get thicker and stacked around us. Or could we see a potential risk on, try to push up to this daily squeeze top and consolidate? It's worth noting, on the last quad witch, we saw something very similar, where we got a gap up and a strong push, just leaving that 4,200 in the dust where we struggled for so long. So we have to see if they're going to do a similar risk-on kind of move to gap us up, maybe tag that daily 50 at 4,500, and then make the push back up to 45.50, then 4,600, then this recent high, 46.35, and then keep trucking. Or are we going to run into something similar to that 45.50? And if we just zoom in, that could mean coming up quickly, tapping this 45.50, creating a double top, rejecting the top of that Ichimoku cloud, and then trying to roll over for a potential gap fill and to make an M pattern. I don't know if you guys can tell that too easily, but we made our push up, had our pullback for kind of a neckline. We are bouncing, and gapping back up. So the play could be to first come up and test these highs, potentially establishing a double top M pattern. Then we have to take out the neckline to come down and hit the bottom of the M and the bottom of this daily Ichimoku. I know that's kind of wide open, but I would try to plan for multiple scenarios so that I'm never really that surprised, right? We can plan for the gap and go, double top, roll back over M. We can plan for breaking through that top, running into a key level, pulling back to hold that top, establishing a higher low, and then a further rally. We could easily, before we wake up tomorrow, be back down filling this gap, where we try to hold, establish a higher low, and just stay in this range. A number of scenarios that we could see this week. So overall, coming into Monday, I'm going to be watching these key levels. Obviously, we're gapping right back up. We have a daily Ichimoku, a daily Keltner up near that 45.25. Something that could hold us back or be something we reject to tag the 50 before heading up to the daily squeeze top and that recent high. If we do start to come back and lose the daily 50, we know the key levels that we'll be falling back to because we've been dealing with them for a couple of weeks now, right? And if we do start to lose that daily 50, come back to fill the gap, it could be something like the highs from Friday, where the daily 21 now sits, around 44.80. That is, far enough to fill the gap and then keep trucking. A very interesting gap up into this CPI week. We'll have to see what we get. Moving on to NQ. NQ definitely trying to hold up the best, looking a lot like ES, where it fell back to its daily moving averages and trying to hold and get going. NQ is also gapping out of these stack squeezes up to about 15,500. It has a daily Keltner just above that as well, daily 50, a little further below, actually closer to filling the gap and closer to Friday's highs. And overall, come on, don't freeze on me. Come on. I love it when toss phrases in the middle of a stream. It's always very helpful. There we go. NQ does have that daily squeeze top up around 15,700. Obviously, we got to get through that first daily Keltner to the upside, get through these recent highs from the beginning of last week, around 15,580-ish, we'll call it. So if we can clear that little 30-point zone, then we could make it up to that 700 and that daily squeeze top. If we roll over and can't hold this 15,400 down to 15,380, where these daily 50, daily 8 are, if we can't hold that on a little retest of this gap, then we can obviously target right back down to the daily 21, daily 15, and kind of the lows from Friday. Always got to see, you know, we got a gap up, but now the Asian market has to digest that. And, you know, it's not been going the best over on the Asian market. And then the European market will get in and decide what to do next before we wake up and see it in the morning. So, overall, those are the levels I'm watching on NQ. We'll move on to Ruddy. Looking a little worse for the wear. Definitely sold off again, back down through the daily MAs, but made it down to its daily 200, where it consolidated and held Thursday and Friday. Of course, the gap up, it's getting it close to the next daily moving averages, the daily 8 and daily 15, which sit around 1875. If we can clear those, we want to target 1890, where the daily 21 sits, 1900, which is a huge psychological level, and then back up to the daily 50. Talking about if we do see a good rally this week on the gap up. But if we roll over and start to lose, I'd say like 1870, then we want to target down to 1862, 1860, kind of the highs from Friday, and a retest of this zone that we consolidated. Moving on to YM. Again, like Ruddy, sold off a little harder, did not hold its daily moving averages, but just made it to that first Keltner down. And every time it got near there, buyers stepped in repeatedly. We need to understand the way that flags, are either getting bought up or sold for the next move. And I would say, an up channel overall. Every time we got past that Keltner, we sprang right back above. So you could say they bought all those dips, you got progressively higher lows, now we gap out of the channel. If we roll over to lose, I'd say 34,900, a little bit below that daily 50. Then we want to target back to 34,800, 760 where the daily 21 sits. And if we go past that, we want to target 700 and to Friday's highs near 650. But if we can hold up that daily 50 and this gap and go, target up to 35,000, 35,100 where that first Keltner sits to the upside, and then it's 35,300 where that daily squeeze is just getting established. Moving on, Apple. Now, Apple had a big old reaction last week. There was some news out of China that the Chinese government is banning iPhones from use. I didn't really dig into it that much, but you have to think Chinese government and any state-funded businesses, they're trying to ban iPhones that will have a large impact on the sales in China. Yada yada, but it's not too unfamiliar than how we've been treating the Huawei's of the past, right? So we'll have to see how investors react. They just sold it back to 175, 173.5, but overall, you could just say 175 was kind of the lowest we really got on the cash session for any extended period, and then we were right back up. So we'll have to see. Is Apple going to have a strange gap up as well? Looks like no. We don't have any info on it right now. But we'll have to see if Apple gaps back up to the daily 21, daily 8 around 182. If not, and opens around 179, you want to play up to that 182. If it can get through that and 183.5-ish, then I'd be playing up to that 186 where the daily 50 sits with a daily Keltner. If we do open and Apple starts to sell off, I'd look for it to try to hold that 181.5 and 180, Friday's highs. Anything below that, then we're going to be going back to retest some of these bases, 177, 177.5. AMD. Yeah, AMD got down to that daily squeeze bottom in that 100 level. Consolidated and wedged, and then made a nice push back up to that daily 50. Yeah, last week we saw it sell back off from that daily 50, but ultimately tried to hold around that 105 and that daily 15, which sits at 106.5-ish. So I have to see if it gaps up with the market, but overall looking for it to try to hold that 105, 106.5. And these daily moving averages. If we can catch a nice push off of this base and clear the daily 21 at, like around 108, then we want to play up to 109.75, Friday's high. The daily 50 back up here at 110.5-ish, more like 111. And then if we can clear this recent high, you want to be playing up to 112.5, 113, where the daily squeeze top sits. Very easily setting into a range. Let's see if they want to push it up to the top of the range first before any profit taking. Let's see if it gaps with the market. Same with the rest of chips. We want to see who reacts when the market gaps up like this. In the morning, if we are still gapped up, we want to pay close attention to all the names that are making the gap up with it. If anything, I'm going to assume it's probably tech heavy. So moving on, Amazon made a little down channel from this recent high near 140. And as you can see, that daily 50 was the target. Got down to it on Thursday, tagged that daily 50, and strong reaction right back up. That is why we track these daily moving averages. They can tell us information like, are they loading up right in between some moving averages to push away from them, and then profit take back to them just to repeat it all over again on a very long, drawn-out potential M pattern, right? Or you could even just say an up channel. But made that nice bounce last week up near 138. We'll see if it gaps at all. Overall, if it can hold above 137.5, kind of the last bounce point from Friday, you want to be playing it up to 140, 141. And yeah, I'd say basically 142 where that second Keltner is and near that 2-day squeeze top. If we start to lose that 137.5, you'd want to play it back down to about 137 where the daily 8 is. 136-ish where the daily 21 is. And anything past that, it would be back down to this daily 50 again to try to establish, a bit of an ugly W. Moving on, Google. Just a resilient name, especially in the last, month or so. When we saw some names sell off hard, Google really has just been hanging out near this 130 and pushing back above it. As you can see, got up to that 138, and last week, very, very choppy, slow fall back to 132. It didn't even need to tap the daily 21. It just held a 4-hour squeeze bottom and then went right back to the top. So very strong name. As long as we can stay above 135, where that daily 8 is and Friday's low, still loving this to hold and push through its daily squeeze top near 137, take out recent high of 138, and try to make a push up to 140, 141, where that third Keltner is to the upside. Moving on, IWM, much like the Ruddy, came down near its daily 200. Let's see if we have any weakness in Ruddy or IWM tomorrow. It might be that IWM wants to tag its daily 200 before taking off completely, but if we do see strong rotation into small caps, we probably want to be playing through the break of 185 or a hold of it if we get a gap up, playing up to 186 where the daily 8, daily 15 sit, and then 187.5-ish where the daily 21 sits. Moving on to Meta. Very stacked squeezes last week, but provided some great trades. I believe it was Thursday. Yep, Thursday was that crazy day where we played that morning drive up and it reversed all the way back down to these stacked squeeze bottoms just to turn around and hold. Overall, let's see if Meta can stay above, call it 295, 296 where the daily 21 sits. Try to get back through 300 where the daily 50 sits, and then play back up to 305, 307, recent high, and up to 310 in this daily squeeze top. Microsoft. Again, like other tech names, holding up above its daily moving averages and pushing up to this daily squeeze top. Big old move on Friday. It was kind of the last one to break this little down channel and take off right back up to new highs. So very strong name. Overall, on any dips, want to see it hold that 332.5 where the daily 50 sits. Oh, and the last bounce point around 333. Nice little 50-point zone there to hold on any dips to find buyers and push through Friday's high, push through this daily squeeze top, and get it to fire. With the goal of getting up to 340, 346, where the third Keltner sits, and this zone around, 348, 349, 350. Excuse me. Moving on to Netflix. Again, another strong name. Oh, yeah, I remember, a couple of weeks ago when we were talking about down near this 410, it's a great spot to go long, right back up to 450, and she did not disappoint. Holding that first Keltner down, back through the moving averages, up to 450, and then a slow fade back. You could say, just like Microsoft kind of lagged till Friday to take off, you could say that Netflix has been waiting. So it might be a decent name this week. All of the squeezes have now stacked. We're going to get a gap up on the market. So it could be a good name to play through 450 up to 460, and this daily squeeze top up at the next big key level at 467. Overall, I'd be looking for it to try to hold at 438.5 daily 8 in these squeeze bottoms, and then take off. Watch these stack squeezes. This is a decent candidate this week. Been strong, held up really well. So I'll have to see where she opens in the morning, but I'm going to keep an eye on this one this week. NVIDIA, looking a little uglier as far as chips go and whatnot. They did just have their dividend payout, though, and they made it down to the daily 50, so not a bad target this week as well. You could say, just like the others, it has some catch-up to do. So, for instance, if we are going to see a rally, and some names that we have seen that are strong and at daily squeeze tops, they might kind of get hung up, and we might see some catch-up on some other names. So keep an eye on NVIDIA, holding above 450, that daily 50, getting back above 464, the daily 21, and trying to make a recovery back up to where we consolidated north of 477.5, 480, to try to get back to this daily squeeze top and that 500 level. If we start to break that 450, then we've got targets to the downside, 445 where the first Keltner sits, 430, 427.5 where the second Keltner sits, and 420 where that daily squeeze bottom is. QQQ came back to those stacked daily moving averages, tight little range, held. Going to get a gap up with everything else. Let's see if we do have a dip. We want to see if we can hold up to that little pre-market print there and Friday's high around 375. As long as we can hold 375, if we do try to do any little gap fills, I'd be looking to play up through 376.5-ish where that first Keltner sits. 380, psych level, 381, recent high, 382, where the second Keltner sits. Beyond that, it's up to 385, psych level, 387, where third Keltner sits with the daily squeeze top. If we start to lose 375, you play back to these daily moving averages, 370, squeeze bottom. Should that give out, we have our daily Keltners. And that daily squeeze bottom, ultimately going to be kind of in the middle. So QQQ is going to be a great gauge. You know, we've started a tiny up channel to try to break through this down channel. If we take off and get through, I just see those buyers step in and give us the push. SPY. Back to daily moving averages, stack squeezes, and we've got our quad witch coming up. So even though we got a great gap up on futures, and it's holding for now, we'll see what we get on SPY come the morning. I would assume it's going to be opening up near like 448. I'm just comparing that. Yeah, see where we sold off from here. We're opening above it, so where we sold off from here actually might be up closer to 449, 448 and a half-ish. So let's see if we are there when we wake up. If so, I'd be, if we open above this pre-market consolidation that started the sell-off, I'd be looking for that zone to hold. So basically around 447 and a half, up to 448 and a half, a little 1 point zone that we want to see hold on the gap for any gap and go. We start to lose, then we're coming back to retest those highs and daily moving averages and squeeze tops, all that. But if we can't get going to the upside, it's up to a 450, 452, and 454, where that second Keltner sits, right near this recent high from last week. From 2 Fridays ago. And anything beyond that, it's up to 458, 460, where the daily squeeze top sits. And Tesla. Definitely been whipsawing around. Big old push up to this key zone at 256, 258, where it peaked above, rejected back to moving averages, back up to test, rejected to moving averages, and making some good moves up and down if you're, constantly ready. And as you can see, we watch these stack squeezes for just this reason. You go from bottom to top, hold bottom, go to top. There's great plays back and forth, and you can kind of put risk in both directions at the inflection points, and you get what you get, right? Either way, I want to see it hold these stack squeeze bottoms in that 247, daily 21, daily 8 near that 249.5, 250 psych level. Daily 50 up near 256, again with the gap up on the market. We'll have to see where this one opens. If it opens above 252, a little dip to 252, or Friday's highs near that daily 50 would be a nice hold to try to take back off through these recent highs, 261, get up to 264, 268, 270, and then that third Keltner up near 279.5. And finally, VIX. VIX was on a steady downtrend until it got to that daily squeeze bottom, and then what do you get? You get gap ups, just to get us back to some key levels, the daily moving averages, and now they're rolling over away from it, and we're going to see a gap up on the market, a gap down on VIX. So just like the market pulled back to daily moving averages, and VIX starts gapping up, what's our target? VIX is going to get up to those daily moving averages. And for upside, what do we want to see? We want to see it get there and reject. So, as far as a gap and go, and maybe a strong quad witch, just like last time, we'll need to see VIX. I'd say, stay under 14. right? It's going to have a little gap down, might have a little undulation back up to 14. Want to see it stay below 14. At the worst, 14.3 that daily 8. Reject those and roll over for new lows south of 113 for us to get a strong rally up to something like daily squeeze tops or recent highs on the daily. If we are going to see something more like a gap up till the morning and then we drop, this week to try to fill the gap, then we're likely going to see VIX hold above 13, 13.5, start to get back above 14.3, make its way back up to 15 in these daily moving averages again to establish maybe like a double topped M. If VIX were to get through 15, 15.5, then this gap up might have just been a little bit of bait into the week. And we could see some selling off back down to last week's lows or lower, which would push VIX through last week's highs and up to the 16.5 again. But overall, we did get down to the bottom of a daily squeeze. It pretty much has fired. We got the response back up to the daily 21, which is going to be the middle of that squeeze, and we're rejecting away. I'm sure that this drop in VIX and this reaction on Friday has led to them loading to the upside and the gap up that we are seeing. Just more fun manipulation on deck. So, that's it for prep. I'm going to wrap it up. I know this was a little bit of a shorter one, and maybe a shorter one than you guys are used to on a Sunday, but, overall it's an OPEX week. We're going to be dealing with this interesting gap up. We're going to have to see what the volume steps in to do, and definitely see where we are in the morning. But hopefully this was helpful for everybody. We went over a couple of, really great setups. I'll be keeping an eye on NVIDIA and Netflix for some potential catch-up if we do have the gap and go, right? I'll be playing the SPYs and the QQQs because those are going to be the strong names trying to lead. And we're going to have to keep an eye on small caps and YM to see if they can have a good response back up to their daily moving averages and through so that all indices can kind of push together. And I know it sounds crazy on an OPEX week. We have, kind of all been told or taught or learned over time that an OPEX week should be, pretty stale. But that's not what we've got this year. This OPEX, we took off. Last OPEX, we took off. Came back and tested and took off for more. So, definitely going to be interesting. Excited for the last few months of the year. It's very interesting, this daily squeeze that we're moving into. How long will it be intact? How long will we be stuck in this range? Can we break out and go higher? We will just have to see. But that's it for prep. Thanks everybody for tuning in, and we'll see all of you in the chat this week.